Hello and welcome to my channel. Thank you so much for being here. The idea of central bank digital currencies is not new. This topic has been brought up many times before, but recently it seems to have gone somewhat viral, with articles being written left and right. And the timing could not be more perfect. Because now more than ever, people are questioning whether cash will become obsolete in the future. With all of this recent news about central bank digital currencies, this question seems to be even more relevant today. So let's talk about it. Before we begin, please consider subscribing to my channels and make sure that you ring the bell to get notified when I upload a new video. We are working very hard to complete our analytical work on the digital euro by the end of the summer. In April, the country's central bank, Sveriges Riksbank, announced that it had selected the technology for an upcoming e-krona trial that will likely start in the spring of 2024 and last about a year. The Swedish central bank started researching the possibility of issuing a CBDC back in 2017. In fact, according to the Atlantic Council report, China's CBDC program is the most comprehensive in the world, combining elements of retail and wholesale digital currency infrastructures into one system. In addition to reducing the cost of processing cash, the article mentions that a digital euro could improve the efficiency of payment systems, enhance financial inclusion, reduce the risk of counterfeiting, and even support innovation in the development of new financial services. As you can see, the argument that a CBDC would reduce the cost of processing cash is repeated multiple times. Well, the answer is simple. A CBDC would be a form of digital money that would be held directly with a central bank rather than a commercial bank. This would essentially mean that people would open accounts with their central banks. Here's a quote from the ECB article that explains this concept. We live in unprecedented times. If you haven't already subscribed to my channels, please consider doing so and join me on my journey to financial freedom. Thank you for watching. A CBDC would be money issued and ultimately held directly from the central bank, possibly alongside cash, which would remain legal tender. In other words, a CBDC would be one of the forms of money that households and firms could use to make payments. Remember that both cash and a CBDC would be legal tender. This means that merchants would be required to accept a CBDC, just like they are required to accept cash today. But we must remember that anyone who has worked in banking knows that banks spend very little on paper money. Households and firms would hold deposit accounts with their central bank, possibly via commercial banks as intermediaries, which would enable them to make purchases by using the digital form of money. As you can see, people would either have a direct account with their central bank, or they would have accounts with commercial banks that would then use the central bank's digital currency to make transactions. In this case, a commercial bank would act as an intermediary between a person and a central bank. The majority of expenses related to cash are associated with transportation, storage, and destruction of cash. Why would anyone agree to have their money held with a bank that is essentially a middleman? If you think about it, a CBDC would actually eliminate the need for commercial banks entirely. It would make no sense for someone to keep his or her money at a commercial bank if that money is already digital and can be kept directly with a central bank. In that case, why pay interest on your money or pay fees to your bank when you can keep it with a central bank for free? Banks have sophisticated software systems that account for every single dollar bill and coin. These bills and coins are often stored in $400 bags in bank vaults, and there's zero need to replace them with a digital version of cash. The entire argument that a CBDC would save banks money simply does not hold up. In contrast, most other countries, including the United States, are still in the research stages. For example, the Federal Reserve has been researching the pros and cons of a CBDC since 2021. So far, it does not appear that the Fed is actively working on developing a CBDC. Although Jerome Powell said earlier this year that he doesn't believe that a CBDC is needed right now, said we don't need a central bank digital currency right now. We'll have it effectively with Fed now. Of course, this could change in the future, though. And unlike the ECB, the Riksbank is considering introducing the digital currency as soon as 2026 or 2027. Then we will decide if we proceed with a digital euro and move to the next phase, which is the experimental one. Let's take a look at the following quote from the ECB article. A CBDC could also make it easier for authorities to monitor and prevent illicit activities such as tax evasion or the financing of terrorism and crime. Do we really want to make it easier for authorities to monitor our spending habits? Panetta emphasized that there are no plans for launching a CBDC in the Eurozone by 2027. But of course, once the research phase is completed, things may change. So what exactly are central bank digital currencies? A central bank digital currency would be a state-backed, a digital payment alternative that could be used by consumers and businesses alike. In other words, it would be a digital version of fiat money, issued and regulated by a central bank. One of the biggest supporters of CBDCs is, of course, China. China became the first major economy to launch a digital currency for general use in 2022. China's digital yuan is legal tender, and it is backed by the People's Bank of China. According to a report from the Atlantic Council, China has already distributed over 11 million digital yuan to almost 2 million people since the launch of its CBDC. The report also mentions that in the first half of 2023, total transaction volume of the digital yuan exceeded $55 billion. The report states that while the exact number of transactions remains unclear, the disclosed data suggests a significant increase in usage compared to previous months. It goes on to say that the Chinese government is likely encouraging state-owned enterprises and public institutions to use the digital yuan in order to boost adoption. As you may already know, the Chinese government heavily promotes the use of Alipay and WeChat Pay. There are frequent promotions and discounts offered exclusively to those who pay with these two payment platforms. I personally experienced this when I visited China. Many merchants would not accept credit cards and would only accept payment through Alipay or WeChat Pay. Those who paid with cash instead of these two platforms would often not get any sort of discount that was offered to customers. The Chinese CBDC uses similar technology to Alipay and WeChat Pay. So the transition from Alipay or WeChat Pay to the digital yuan would be seamless. Last week, the European Central Bank published an article titled "The Future of Money in the EU: Retail CBDCs, Motivations and Implications." The article discusses potential motivations for issuing a retail central bank digital currency in the euro area and implications for the design of such a currency. It was co-authored by Fabio Panetta, who is a member of the ECB's executive board. In the article, he says a CBDC could reduce the costs associated with handling cash, which would benefit both public administrations and private businesses. Of course, he is referring to the cost of producing physical banknotes and coins, which would be eliminated altogether with a CBDC. He added that innovation in the area of digital payments should not only be left to the private sector, and that the introduction of a digital euro would allow consumers to choose how they pay, and that it would help maintain financial stability and monetary sovereignty. CBDCs, or central bank digital currencies, are gaining quite a lot of attraction these days, especially after China launched its own digital yuan. We will talk more about the Chinese CBDC in just a moment. But first, let's take a look at some recent news. In an interview with Politico, Fabio Panetta said the ECB will complete its CBDC research in a month and then decide whether to launch a pilot. Now, in the meantime, Sweden is moving ahead with its own CBDC trial. As you can see, central bank digital currencies are gaining quite a lot of traction globally. China's far ahead of any other country when it comes to CBDCs. Let's go back to the article that was recently published by the ECB. And what about financial privacy? Digital money means traceable money. Every single transaction will be recorded and will be available for review. If you haven't watched my previous videos on CBDCs, you may be wondering why a CBDC would even be necessary if we already have digital payment platforms such as Apple Pay, Google Pay, Venmo, Zelle, and others. Here's another quote from the same article that explains how it would work. So what would be the main advantage of holding your money with a commercial bank? If there is no real difference between holding a CBDC or holding traditional fiat currency, of course a CBDC would also give a central bank direct access to a person's finances, making it much easier to control and regulate.